All right, good morning, everybody. Let's quickly check if this audio works. Thanks, Joel, for the heads up. Appreciate it. Just let me know quickly. Give us a yes in the chat box if you can hear me pretty well right now. That would be awesome. And then we'll get started. Joel, is the audio better now? You can hear? Okay, perfect. Excellent. Thank you. Very much appreciate it. Cool. Great. Okay, listen, it's 3 minutes past the top of the hour, so we better get started here. And we will. Here we go. All right, cool. Again, good morning, everybody. Hope you're doing well. Happy Wednesday. Serge Berger here from The Steady Trader. This is our morning show called Set the Market. If you're here for the first time, we're going to spend the next 10 to 15 minutes going through the top things on our mind as far as markets are concerned. Please do make sure you give us a thumbs up, like, and you subscribe to the channel. It helps you to be alerted in real time when we go live so that you don't have to be reliant on email alerts or anything like that. So, let's get started. I'm looking at my notepad, and by the way, I have a notepad. It's typically about 3 pages long every day. I take a lot of notes on my notepad. It pretty much goes everywhere I go. And on this notepad this morning, I've got, first of all, we need to talk a little bit about options expiration this week, what that means for the equity market, number one. Number two on my list here right now is I want to talk about quantum computing stocks. Number three, I want to talk about Meta. And number four, which we'll actually start out with, I'm going to talk about the DAX and the potential for a turnaround Tuesday today. And I'll define what that is as well. So when we look at markets this morning, what I see is a little bit, and I say a little bit of risk off. This does not mean that this is the end of the run. This does not mean that it's time to essentially, go hide under a desk. But I will also tell you that in speaking with some investment managers yesterday, it is very clear that what we are seeing is people being kind of hedging their bets in their commentary, but that they're very willing to very quickly change that tone. So if you listen to, say, like an investment strategist at, like, say, a major bank, an analyst or something like that, right? They know that nothing is broken yet, at least not on the surface, but they will be very, very quick to say, oh, risk off, right? For people that are listening, they are probably not going to be immediately reacting to that. And that's the risk in this market. While things are going well, the U.S. economy is growing, the European economy is looking a lot better, the stock market there is amazing year to date. It is one of those years where things could shift pretty quickly from a headline perspective. I don't know what that is, but it could, right? So that's something to keep in mind. So when we look at this morning, the German DAX, which has been leading, it was up 15% up until yesterday, year to date. This morning, it's down 1%. That's nothing, right? But still, it's down 1%. It's now back to where it essentially was last week, Thursday, so 1 week ago. And, we have to watch these kinds of things very closely because in this kind of a headline-driven market, these kinds of things can either be an absolute nothing burger or they can lead to much more very quickly. It hasn't yet, but that does not mean that it can't. And given where we're at, it very quickly can. So I just wanted to give you a heads up for that. I think the German stocks, as much as I think they have ultimately could have much more upside, they're probably getting very overbought, just like a lot of stocks in the United States. that have been momentum stocks are probably a bit overbought, if not very overbought here in the near term. That gets us to the second thing, and that is what's called the phenomenon as turnaround Tuesday. Now, the S&P 500 continues to hold in very, very well. You can see we talked about, it maybe breaking higher, right? That's entirely possible. We talked about not wanting to, fight this necessarily. This is the SPY ETF. It tracks the SPX, the S&P 500. But there is always the potential for a turnaround Tuesday. So our turnaround Tuesday, and I know today is Wednesday, so why, Serge, are you talking about turnaround Tuesday? Well, U.S. markets were closed on Monday. So it's not completely impossible to think that, and this is a sort of an ongoing joke that I have with some of my old buddies on the street, if Monday is a holiday, and it was on Monday, the U.S. stock market holiday, is the turnaround Tuesday concept rolled out to Wednesday, right? So Wednesday being the Tuesday. In my observations, that tends to be the case. So I just want to make people aware that the turnaround Tuesday could be something that is in the cards for today. So if you're playing for breakouts, if that's your thing, just be mindful that could be a false trap, or could be a trap, I should say, that we want to just be at least mindful of. So that's number two. So DAX giving us initial warning signals here. They've been leading the market year to date, front running essentially a potential Ukraine-Russia sort of end of war deal. I say potential, I don't know, obviously, but that's, I think, why the German DAX is up so strongly, at least in good part. Turnaround Tuesday potential, and that gets us to options expiration. So this is now a U.S. Phenomenon. So in the United States, we have a big monthly options expiration that happens, and some of them are bigger than others. This happens every month, but some of them are quarterly ones where you also have options expiring on, index options, on futures, whatever, right? All sorts of stuff, and some of them are just regular monthly ones. Nonetheless, we have an options expiration week for the monthly options this Friday, so in 2 days from today. And again, it's tricky. There's a lot of conflicting things. So my point is we have to be open-minded here. It's entirely possible that the equity market tries to push higher, but it's also entirely possible that it very quickly reverses. Because as far as I'm concerned, yes, we're attempting the breakout here, and we might stick this landing. It's possible. But the options expiration thing can also quickly flip the script. So I just want to keep people open-minded. So it's not a time to get super bearish. I also don't think it's time to be super bullish, because there is a lot of risk here at the margin. So what does that mean? Like, what do I do here, Serge? Well, I can't give you investment advice, as you know, but through the lens of education, from a long-term portfolio perspective, it's probably not a stupid idea to take down some risk. That's our thinking, some risk. That doesn't mean I need to liquidate my portfolio, go hide in a bunker, and start eating, astronaut food. But it does mean that maybe taking back some risk is not a bad idea in long-term portfolios. From a trading perspective, the name of the game, as far as I'm concerned, is to remain humble and nimble and open-minded. Because until we have an actual move here in U.S. equities on an index level, it's just, we're largely going sideways. Yes, we're at the margin going higher, but still, it's a sideways move. And that's from these kind of slow moves, and this is kind of my point, from these slow moves in the market, and we've seen a slow kind of grind, typically come pretty quick moves. There's a sort of famous saying, and I certainly can tell you that, observing that for 6 years now, that is typically what happens. Now, obviously looking at the chart and, ignoring most everything else, people would say, oh, that move's going to be here. And it could be, but it's the year of the trader, and I'm telling you, there's an equal chance, in my view, that next move is this. And this is the one that people don't want to hear. They don't want to listen to it. They don't want to believe it because it hasn't happened in 15 years. But it could happen. The fake out breakout, right? It can happen. It's a real thing. It happens in normal markets. I don't think we have normal markets, but in normal markets, it happens all the time. So we have to be mindful that could happen. So open-minded is very important. Now, so that's DAX giving us a 1% down day for the first time in a while year to date. being the leader, turnaround Tuesday potential, options expiration. Let's talk about quantum computing stocks. And now people are waking up. I'm sure the attendance rate just went up. The people paying attention just went up. Oh, sir, just talk about quantum computing stocks. Okay, let's talk about them. So here's the thing with quantum computing stocks. If you look at them through the QTUM ETF, which I want to show you the holdings in a minute. This is exactly what I'm seeing with the broader market too. I mean, you guys maybe give me some feedback if you have any. Given this pattern, what would you say is the path of least resistance? Give me a up. Type in UP if you think the path of least resistance is higher for this pattern. If that's all you do is look at patterns, and type in down if you think the path of least resistance might be to the downside, up or down, based on the pattern alone, right? Just kind of wondering how you guys were thinking. While you do that, and please, I'd love to see some engagement. It's just good to get some engagement here. Let me also entertain you with showing you what some of the holdings are in this ETF. So these are quantum computing stocks, right? These are names that are in the headlines. A lot of people think there's a lot of potential here for these names, and I don't disagree. I think that's actually very possible. So classically speaking, this would be, and let me make this a little bit better so you guys can all see this. Classically speaking, this would be a bullish setup. Like if you do technical analysis 101. But again, the point I'm trying to make is not to be annoying, although I'm sure I'm a little bit annoying. But it's to be open-minded. If there's one thing that I very strongly believe in this year that is going to hurt a lot of people is these blind assumptions of a stock that looks like it's going to break out, will break out, and something that's down a few percent is going to go up, right? So the classical breakout stuff in this market, I think has a much lower likelihood of taking place and leading to false breakouts. What a lot of people haven't seen in a long time is a breakout fake out. And I think we're going to have a lot of those this year. We could easily break out. The S&P could break out. But I also think there's a really good chance of that then quickly leading to this, right? A lot of people are used to this. This is what's been happening for 15 years. It's down. Oh, it's going to go back up. And it did for 15 years. But when that starts to change, a lot of people are going to blow up their trading account first, and their investment account's going to be down 50% because it's long all the same stuff, the correlation trade. So some of the names in this ETF are names that everyone's, I think, familiar with. So Palantir, right? So and this is the exercise. So look at Palantir. I mean, the thing is, it's an absolute rocket ship, right? It was up another 4.5% yesterday. I'll come back to Palantir. I want to show you something else on that. Thank you, Steve. I appreciate it. Please give a thumbs up like, yes, please do. So Palantir is qualified as a quantum computing stock by this ETF, right? That's not my way of analyzing a stock. For some reason, Alibaba is a quantum computing stock. I don't know why. Whatever, it is. And what you're seeing, what I'm trying to show you is these are just two stocks, right? Some of these names have gone absolutely vertical, right? Yet someone's mentioning IONQ, right? And this one too has, over the course of the past number of months, gone vertical. But particularly when you look at something like BABA and PLTR, they've gone absolutely vertical. So I like to look at the constituents of a stock when I look at an ETF. So this is what I'm trying to say. So a lot of these stocks have gone completely vertical, yet the classical analysis here from a technical perspective would be, hey, this is about to break out. And it may, right? But if the constituents are already very stretched, it's going to be very difficult for this ETF to skyhook higher. it may just consolidate. It may, it may correct 10, 15%. So, I like these names. I actually really do. But I think that the assumption of something breaking out is imminent. That's very much a thought process of the Reddit boards, of some of the fun-loving chatter on Twitter, some of the chart-chasing things. Like, when that game stops, and it will stop at some point, it is going to hurt so many people. And I think the quantum computing stuff here is certainly something that that a lot of people are watching, and I think it's one of those exact good examples, right? Two more things I want to talk about. So that's quantum. So I actually like the setup. If I look at my market rover, which is our trend following algorithm, I will show you that QTUM is actually in a confirmed bullish trade and a confirmed bullish trend, right? So it's bullish. There's no doubt. The question is, does that mean it has to imminently push higher and break out when the constituents are already very stretched? And I think there is, at the margin, a lower likelihood of that in this specific instance. So I just don't want people to, I want people to remain open-minded. Lastly, Meta. And I'm showing you Meta for the reasons of correlation. So when you look at things that have moved very sharply higher year to date, it's Meta. It's the German DAX. It's Alibaba. And I want to quickly share with you what has been happening here. So Meta yesterday closed down 2.75%. It's had a hell of a run. Obviously, at some point, it's going to take a breather. The DAX, as we looked at before, is down 1.25% today. It's the same chart. And then we can also look at something like, and I just lost my train of thought. Meta, DAX, completely just totally lost my train of thought. Anyway, there's others. Oh, BABA. It wasn't down yesterday, but it's completely going vertical. So again, we have to be mindful here that the correlation of these risk assets is going to be very high. And so I don't think we can play the same game that we have over the past, or a lot of people have over the past 5 to 10, 15 years of, hey, I'm going to pick Apple over Microsoft or Microsoft over Apple or whatever, when the correlation is so high that it's going to correlate together. And it doesn't matter whether it's the DAX and Alibaba and Meta. It's when it's risk off, it's risk off. And quite frankly, when it's risk on, it's risk on, right? So I know that's a whole bunch of stuff here this morning, folks, but we've now done our 15 minutes. Again, the recap, it might be a turnaround Tuesday today. At least it is so far in the German DAX. You may not care the tiniest bit about the German DAX because you long the S&P all the way. Perfectly fine. Just know that this is one of the leading indices this year, and it's now mean reverting. It could be a turnaround Tuesday because today is Wednesday and Monday was closed. So turnaround Tuesday on a week when we have a holiday, and Monday would be Wednesday. That's another thing. So that's number one. Number two, or number three, I should say, quantum computing stocks. Again, we want to respect the potential for a breakout. These are the Palantirs, the Babas, the Rigettis, the IOINQs of the world. However, they're very stretched internally. So, I think until we break 86 here on a solid closing daily basis, I wouldn't be chasing this. It could actually be a breakout, fake-out move in that case. Meta's reversal yesterday or breather, it's not a reversal, it's a breather. Something worth watching, not because it's a bad company, it's a good company, but because if it were to coincide with a broader risk-off move, then this will have been in hindsight a good signal. Last thing really quickly, I do want to share with you what we are watching intraday, and I'm going to quickly show you some of the things that have been taking place. We have just a hell of a lot of opportunity currently on an intraday basis. I like to use the trender. It's our momentum indicator, and the Vertical X Pro. The Vertical X Pro is what you're looking at seeing on your screen. This is a 5-minute chart of Palantir yesterday, and you can see how it nailed the top. and that would be a signal to, let's say, buy puts for an hour or two or so. And you can see Palantir basically collapsed 4.4% and then became a buy from a momentum perspective. Look at this. So then it became a buy from a momentum perspective. So there's so much opportunity in this market. Same thing with NVIDIA yesterday. If you look at NVIDIA, it too became morbidly overbought intraday right there. And then it was time to buy some puts. So there's a lot of volatility. It's not necessarily in the daily charts yet. I think it will happen on the daily chart. It's currently happening intraday. So stay tuned. And we're very close from one headline tossing this market into some sort of a volatility spin, which does not mean that things are going to collapse. But again, we need to be open-minded. That's really kind of my main point here this morning. Folks, I'll see you guys over in the Trade Ops chat room in about 5 minutes. We're going to do some trade setups. I'm sure there's a lot of stuff that's going to set up here today as usual. And we'll see you back here tomorrow, Thursday, for another Set the Market morning show, 9 o'clock Eastern. So thanks for being here. Any questions, as always, please let us know. You can email support@thesteadytrader.com. Again, please give us a thumbs up like. Please subscribe to the channel. Very important, so you get alert in real time and so that we can continue to do this morning show. Thanks so much, folks, and I'll see you in the chat room here in a few minutes.